Okay, welcome to our weekly highlights, and today we are going to be sharing with you on what are the stocks that has been running, and also what are the views in the market on the, tomorrow's CPI numbers in the US, and hopefully that could give us some light, some guidance on what should we be taking in the market going forward. So let me share with you on this slide, or sorry, this trading platform. Can you see my platform right now? Okay, so what are we seeing right now is a snapshot of what is the gaining and also losing sectors for now. I believe that there are two camps right now. One is, favoring the CPI numbers to go down. One is favoring the CPI numbers to go up. Then, market fall further, and people can scoop up shares even at the lower end of at the lower end of the share price. Uh, okay, so if you're taking a view that the CPI numbers is going to come down, FOMC is going to pivot to more dovish, then people are buying tech. Okay. Then the next segment that people are looking at value means not growth stocks. People are looking at healthcare. So these are the two that has been moving up higher. So one is betting that CPI numbers is going up, going down, and the Federal Reserve is going more dovish and need not to be so hawkish going forward, then people will go for tech. And healthcare, most of them are looking at this as a healthcare, as a stable value stocks. Therefore, they are going to buy into those stocks. So these are the two camps that people are buying into. But again, there are third one, okay, energy stocks. Why people are still buying into energy stocks despite the oil price is falling from 140 right now, it's about 90 plus, again 80 to 90 plus. So there must be something that is shifting the stance on oil gas counters. So one of the uh, think that people are looking at is the Petronas capex. So they are only dishing out maybe one third of the capex, but going forward there are going to be another two thirds of the capex going on. So basically, there are more of the support and services companies going to be in play going forward. You can see that those that are going down is the companies like Heng Yuan, yeah. So let me check also on Hibiscus. Where is Hibiscus? Yeah, let me check. Hibiscus is here, just flat. Okay, didn't move anywhere. So I think if we are taking a view that oil price is down, they shouldn't be benefiting the EMP, exploration and production kind of companies such as Hibiscus and DNEX. But if the Petronas capex is going to be seen going forward, and even higher capex, then support and services company, which is the 90% of the companies in Malaysia on Bursa Exchange, will be benefiting. So if you think about that manner, people are really buying into all these companies such as um, yeah, Velasco, Pradana, Penergy, uh, this is a Reservoir Link and Dialog MHP. All these are actually support and services company. The main that recently has captured attention was Dayang Dilium, which is having a very strong results. Coastal as well, I think. Most of them are having strong results on a consecutive 2 quarters. So which means that over the past 2 quarters, despite slowing contracts, they are still able to make good profits. So going forward, I'm expecting all this, to benefit under this Petronas Capex kind of storyline, and oil and gas should be one of the black horse down the road, at least 4 to 6 months period. So that is just an overall view on the stock market. Basically, people are betting into technology because of the CPI numbers might come down and Federal Reserve might pivot. So FOMC is next week. So if next week, everything goes, clear, they are, going back into slightly more dovish stance, then yes, these technology stocks will, rally. But again, if the CPI numbers is not coming down as fast as what we think, and then perhaps people are going to avoid tech counters again going forward. So this is just maybe buy on rumor, sell on news kind of operation. Basically, people buy ahead of the events. If the events is in their favor, then they will sell off the events. So that is kind of one of the ways that people buy in, and they are actually hedging, with healthcare, because healthcare is already so low. Glove counters are value stocks that has been so low in terms of PE, has dividend, has earnings growth, and even Magma has been saying that 6 to 9 months, then we will be able to see the normalizing of glove ASP, or even normalizing demand, and therefore people might be buying ahead of 6 to 12 months. So they are actually hedging in these two sectors. So it's a barbell strategy whereby people buy into tech and people buy into healthcare. One is value, one is growth, but actually two might pan out in the long run, and also in the short and also midterm. Basically, technology might be the short term, buy ahead of events and sell after. Then healthcare is to buy from right now until midterm kind of strategy. So overall, you can see that people are playing with these two. Yeah. Then if you're talking about financial services, why is it up only 0.45% and not super strong up in after the OPR hike? I think people has already realized that maybe Bank Negara may not hike in next meeting, and therefore they're taking a pause, and there is not much catalyst on banking stocks if we are not seeing the OPR hike going forward. So it also depends on Bank Negara whether what is their view. If there is inflation going up, what is the view that they're going to take in the next meeting. So my view is still hold that they're going to continue to hike further in the month of I think the next meeting is in November. Yeah. So I guess that is some of the commentaries that I can provide on selected sectors. Yeah. So I would say that overall, these are some of the sectors that has catalyst. But what else that has catalyst is the telco and media. Telco side, we are still waiting for the 5G rolling out, although there are some part and parcel of things has been rolling out, and that is why you can see OCK has been going up, TM and DG, but still not enough. I think the arrangement between the DNB and also the telcos are a very important timeline that we need to know. Since a few months back they have been saying no extension, but still they are still extending talks, which means that people are not agreeing the pricing or agreeing the shareholdings and things like that, and therefore it is not helping the 5G rollout. So going forward, I think what we can anticipate in next 4 months is there are a few things that are going to emerge as one of the catalysts. One of it will be budget. Perhaps they are going to wait for the budget and say something in the budget on the telco sector and entice the players within the telco industry to take part in this 5G rollout or this DNB implementation of the 5G. So let's see whether when that is coming, because we have been waiting since April, May, June, July, August. Right now it's already September, and the next best timing will be during the budget, which is 1 month from now. So I guess the next catalyst will be telco. Transportation and logistics is still strong. It's very strong. I would say that most of them are going to be in a very super bull run. I would say that even though freight rates is not coming back anytime uh, towards the all-time high area, but it is coming back, coming lower, but still the demand of backlogs is still there. And we are going to focus on shipping industry and not the last mile delivery. Last mile delivery, a lot of people are in this space, and the competition is spiking. So those that has the full-fledged of from shipping until last month delivery definitely is benefiting, but the most benefiting segment value chain is definitely the shipping industry. So like Shinyanshu Corporation, we did put this in our market outlook. If you notice our market outlook, the whole basket performance is near to 20%. So that is our market outlook stock picks. I'm not saying that we can actually replicate that every quarter, but at least we are able to capture some of the good strong trending counters as of now. So I think next maybe is freight management, and also I would say that Swift there is also chance, and shipping MISC definitely is one of those that is benefiting. I think we can avoid airport unless unless China tourist is coming back into Malaysia. But for now, I believe that some of the last mile delivery is not really that well in terms of their pricing, and therefore it is not really good towards their earnings. The bulk is still in the shipping industry. Okay, so shipping is still quite strong. And what else is there? Utilities, not much of defensive players are in there right now. REITs is still slightly positive. So overall, I think I've covered most. And I think I need to also mention about industrial products and services. Industrial products and services, I think it consists of too many things. And if you pull this out, you can get some of the glove counters like Rubberex, some of the chemical like Hexta, some of the services companies um, such as EMS players. They are also under services, and some of ATEC is also under EMS related. SKP Resources is also there. SAM Engineering is also some portion of EMS. So overall, you can see that industrial products are very scattered. You can also have P Metal, which is building material, PCAM, Sunway. Sunway is also there as well, industrial product and services. Hume Industries, cement players, all this. So every industrial products are there, from steel bar to EMS players. So part and parcel is also tech related. So what is decent that we look into this is definitely, if you look into the leading movers, most of them are related to this technology. Kobe, KGB, VS, ATEC, SKP, SAM, PNB, sort of a little bit related to this silicon raw material, and therefore it is going up as well. So under industrial product services, if you can drill down further, you can actually look into those tech companies. Okay, so that tech companies are the ones, tech related stocks are the ones that is benefiting under this rally. So despite selling off in terms of this from this morning until right now, people are still buying into tech related companies as of this juncture. So not only technology is technology sector, but industrial product has some technology related counters as well. So those are the proxies, I would say, to technology. Okay, so right now, so if you understand this whole overall view, hopefully that it can give you some enlightenment on how you should be investing, at least for today or at least for this week. But main idea is the CPI numbers and also FOMC meeting next week. This week and next week, it has two events. One is CPI numbers that will be releasing in the US tomorrow, and also FOMC meeting next week. Okay, so before I go into our daily picks, maybe you can also share this video out, and also click the like button on it, and hopefully that more and more people are able to view our highlights going forward. And yeah, in order for me to review your stocks, I think you need a share badge, which means that you need to share this video out. So I think you can do it right now before I go into my next segment, which is to talk about the top stock picks for today. Okay, so let me get the screen up again. Okay, if you can see my screen right now is pointing towards daily picks. Yeah, here. So today we have put in, sort of related to tech. We have also scattered stock picks that covers, building material, P metal, P chem related to chemical industry, Harbor, which is also under shipping industry, YTR Power under utilities, SCOMNet under the medical. So only that those are related to tech is CTOS, Penta, and UWC. And some people might think SCOMNet is also related to tech. Yeah, medical tech. So people can also relate that as well. But I would say that this is mainly on the medical side. Okay, so the only three companies that triggered our signal this morning, which is um, SCOMNet. No, wait, let me check. Yeah, Penta at 906, it triggered at this point from 417, then it moved sideways, 419. Uh, but overall, I think it is on a very good breakout basis. Okay, let me show you if you are looking at this. Look at this chart here. Basically, if you notice this chart, it has a very interesting pattern. What is this pattern called? It is called, you can say that this is definitely a resistance, and this is support. But if you look into it in a more detailed manner, it is definitely one of the ascending triangle formation. But if you look into more detailed manner, this is also another breakout of a symmetrical triangle formation pattern. Okay, so it has a lot of breakouts that consolidate near towards the 380, towards the 4 ringgit and 17 cents level. So these are the range that after the breakout it has continued to turn sideways, and right now it is starting to break out even above the uh, so-called ascending triangle apex. Okay, near towards the apex, it has been going up higher. So I think this is one of the places that is very interesting that we are going to monitor for a strong breakout. At least for a midterm to midterm perspective, that definitely we are looking at this, that you can put at this range of breakout, which is near towards a firing at 28 or 30 cents level. The next target is about firing at 70 cents. But this is definitely mid to long term. Okay, mid to long term. I'm saying that right now it is considered as a very decent. You can call it the head and shoulder, inverted head and shoulders formation. You can call it this a neckline. It is a symmetrical triangle breakout and things like that. So overall, I would say that this is one of the chart pattern that we wanted, and it has started to move higher, and we should be seeing further upside from this point. Okay, so this is Penta. Penta has just triggered today, so hopefully that in the long run, we're still seeing a good opportunity. Um, Support is located around the 3 ring at 76 cents level. Okay, so on UWC, 30-minute chart. This is 30-minute chart. It's triggered this morning at this point, about 427 towards 433 zone. Right now it's still pulling back, but it is slightly, down. But this is considered as a cup and handle formation. This is cup and handle is here. So the breakout has started here, and hopefully that this could be, seen as a good sign of another way to look at it is also the inverted head and shoulders formation. So overall, we can see this as a very decent upward trending tone. Okay, and that could emerge. That is emerging after the earnings, which is just last week, and people are still buying into this story. Okay, so one thing that all these tech counters are having a risk of CPI numbers going up. So basically, this is good to trade for next 1 to 2 days. But once the CPI number is out, then you can determine further how should you want to trade on the tech counters. This is just based on today's information. CPI numbers and also market sentiment is great, and there are some pattern forming right now. Overall, we are still looking at if the trend is continuing, we are looking at firing it as the next zone for UWC. Okay, so third counter that has triggered is SCOMNet. SCOMNet has triggered around this bar, which is near towards 14154. and highest point is 157. It has pulled back, but overall, I think there is some good opportunity within this SCOMNET. I'm anticipating that this uptrend position will continue. Why is it so? Because the reason is the recent results is actually quite decent. Okay, you can see that recent results is higher than the previous quarter by near to 80%. Okay, 80%. Then on a year-to-date basis, it is up by about 60%. So overall, we can say that the because of the record earnings that they have, people are pricing in that from 136 towards 156 level. But overall, you can see that it has been tanking since 2 ringgit level to right now. Okay, right. I mean, in June, July, and recover all the way up above the SMA 200 zone. So at the same time, we are going to see a very very good support near towards 142. Okay, so this is another pattern that is quite interesting. Double bottom, neck line breakout, pull back, and continuation pattern. So overall, this has triggered today, but it may not sustain at least for this session. But as long as it is still hovering above the 142 level, I'm anticipating further upside towards 165 or even 173. So that is just my idea on today's counter. So basically, we have covered several sectors, basically YTR Power, P Metal, the PCAM, all these are related to chemical industrial companies, and Harbor is related to shipping. We are still looking at potential shipping industry to continue even higher in the next quarter results. And CTOS is basically the recovery theme on the digital economy might continue. So today is just buying pressure has been coming in, and selling interest also emerging after the first session. So tech counters might not be so decent for next half because profit taking activities might come in. But overall, we are going to monitor what is going to happen in the CPI numbers. It's going to be very interesting because if the CPI numbers is above expectation, then it's not that easy for you to trade these tech companies going forward. But for now, definitely there is a catalyst because people buy ahead of the CPI numbers. Once the CPI number is out, then we will have more definite, judgment from that point. Okay, so if you do have any other counters to trade, you also always can go to traders list. These are some of our picks over the past 1 week basis, and this will trigger as soon as it hits our target or it hits our strategy. So one of them is BB Plastic. The the trigger point is about 151 here. You can see a very faded line, around this level here. Then KGB, I think, is one of the strong stocks related to tech companies, and they are in the strong, up, record order book kind of status. This is due to a lot of expansionary mode in terms of the tech companies in the international space, and therefore that has helped them. So it has also secured above, the SMA 200 zone, and this is a very strong, significant breakout as well. I would say a significant breakout for people to buy, even higher, and need not to say much. They are really not affected by the sell down in the tech cycle because their earnings are quite intact overall over the past 2 quarters, and that has seen as a very very good, interesting counter because of the tech counters may come in with weaker earnings, but KGB is still strong holding in terms of their earnings, and also order book has been seen greater and on record, and therefore that is helping the share price even higher for now. So I think right now, since that they have been breaking above the SMA 200, definitely we can look into further upside towards 150 or even 160. Okay. CCK, let's check this out. The trigger is around here, 61, 62 cents level. They are into consumer stocks. I think consumer related. If they are able to pass on their raw mat costs, that would actually help in terms of their earnings. And if they are able to help in terms of earnings, and I think it is considered as a strong, a stronger, more solid consumer stocks rather than those that can't pass on their raw material costs. Like Hub Sing can't really pass on their costs as a biscuit maker. So I would say that those that can pass on their costs, that is one thing that we really like about those companies. So CCK is one of them that has been trending higher despite a very negative cycle in terms of consumer stocks. But right now, it seems like it is on a way up, and it is trying to fight against the previous resistance along the 61, 62 cent zone. So and it did not really fall and hang on below SMA 200 quite long. Instead, it is just a brief moment whereby they suffer through this period of time in 2021 August until right now. It's about near to 9 to 10 months. But after that, they continue to climb higher. So overall, I say that this is still in a very very strong move. I'm pretty sure that results wise, let me check. Yeah, results wise, it's actually even doubled. Yeah, the revenue did not double, but the profit actually doubled. So I guess we can actually take note of this company because earnings wise is very explosive, and I think dividend wise they are quite generous over the years. Okay, so you can actually monitor. Just that the value of the trading is low. Yeah, every day is about 100 to 200. 100 to 200K. It is not very decent in terms of um, trading value. But if you ask me about their explosive in terms of their earnings, yes, and it shows you that even under this very dire situation of higher raw material costs, like poultry farmers are actually been suffering, but they are actually managed to gather momentum in terms of their earnings. So I think they have very good management in terms of procurement strategy as well. Okay, so that is some of the trading ideas for now. And I also have a lot of questions. Let me go through one by one. MYEG is certainly one of the counters that people are asking. A lot of people will be position themselves ahead of the election, and after the earnings, you can see that after the earnings, things have gone more rosy, and it has break out above the 80.7 cents or 80.5 cents level, and that is a good sign that people are buying into this company, and a strong position here that could last towards 90 towards 92 cents level. This could be also forming a flag formation breakout. So just monitor on this counter. I'm having a very good view on this company because after the results, they have been gapping up, breaking through above the 81 cents, forming the flag formation, potentially breaking out again towards the 90 towards 92 cents zone. So that is my view on the MyEG. Is positive. Mr. DIY, I think it is very mixed. It is below the SMA 200 level. But one thing that has been going on is that the Malaysian ringgit versus the China yuan could be helping the Malaysian, ringgit has been, sort of more superior than China yuan as of this moment, despite also depreciating against the US dollar. We are still quite good on that note. So if you ask me, Mr. DIY is certainly looking at this currency to help them into a better position because they import a lot of things from China. And if the China yuan is depreciating against Malaysian ringgit, that would help them more, help Mr. DIY in a better manner. So just that right now, it is not really moving yet. So we're going to monitor when it should break out above this very significant 217 zone. If it is able to break out, then only we can speak for the upside towards 225 or even 236 zone. You can see this is a massive selling, okay, massive selling. So try not to. I think this is still a very strong selling pressure going forward until it can breach above the 226 level. Then further upside should be seen. But right now, it will sort of a ding dong around this level of 217 to 226 zone for now. Okay, Yinson, I think we did mention about this company in one of the highlights. Yinson is definitely decent to monitor because of their results is going to come out soon. I think it's this week. If not mistaken, it's tomorrow. If I'm not mistaken. And earlier on, they have been, getting some awards. Early on, above when they got the awards, it spike up. Then it continued hovers above the SMA 200. So tomorrow is the earnings, and hopefully the earnings is sustainable. And I've gone through some of their earnings. I think is positive. Yeah, let me check. Uh, so yeah, it's slightly higher. It's not too it's not too explosive, but at least it is higher as compared to previous corresponding quarter. So overall, we can anticipate that if the momentum of the earnings is sustainable, then it should break out above the 233 zone, and the next support will be located around the SMA 200, which is around the 220-219 zone, and next target will be around. Let me check. Yeah. The next target will be around the 244 level. So there are a lot of significant resistance along 244, 233, and 219 is support. Okay, so that is with Yinsen. I think there are some questions on the recent IPO counters, Synergens, SFP. Yeah, I think they are into a very extended, I would say extended overbought position kind of move. It is hitting resistance and may pull back in the near term. So we shall monitor for this as potential ending. Okay, potential ending. This might be the wave three, pull back wave four, then wave five, and ABC move of the on the Elliott wave. So let's see how does it pan out. But you always can trail up your profits from this point. Let's say for instance right now it's 103. The EMA 5 is near towards 96, 97 cents level. So you can always use that as the trading stop loss as long as it is still holding above the EMA 5. You still hold until it breaks below that, then you cut or you take profit. Then again, when it's rebounding off, then cut through the EMA 5, then you can go in, then you trail up your profits from that point. Okay, so that is how people will want to maximize their opportunity under this counter. But again, I'm seeing this as an extended move, so shall take more cautious note on this counter. Okay, SFP Tech, it's again, it break out after coming. I think last week we did mention about this company, and if we are looking at this breakout, it happened here, breakout, but it has triggered even higher highs. It is good that it is making higher high and higher lows formation, but after a long stretch, and if today is closing at this kind of move, then perhaps you should be taking note that it might fizzle off into another flag formation. So again, you can use the EMA 5 as the cut loss or take profit level, which is near towards 144. Right now the closing is 154, so your risk will be around maybe 9 cents. Yeah, okay, 9 to 10 cents. So next would be Sam Maiden. Hey, on green energy, I think there might be some goodies in the budget, so we shall monitor on that note. Overall, after Cypark's sell down, a lot of all these stocks are actually into slightly negative region. Just a handful of them are actually above the SMA 200. So this is one of them that it is hovering above SMA 200. It is good sign, and we shall monitor this as a good potential in the upcoming, budget. Budget position, this might be turning out into a much better looking chart. So overall, if you draw this line here, definitely is telling you that this might be seen as a breakout of the trend line and hovering above the SMA 200, awaiting for the consolidation breakout. So you can draw a box around here, maybe, yep, here, try to see whether it covers most of them and to extrapolate to previous, consolidation phase, see where is the significant resistance. So I would say that 70 cents is quite significant, and they are, quite hard to break through of this level. So, but once it is able to break through of 70 cents level, then next target will be around 76, 81.5, and cut loss will be around the 66.5. So if you are trading on this counter, this is outlook. I would say that it is more positive, and it is above the SMA 200, it is above the trend line, and therefore we should be looking into upside on Semaiden, at least for the mid to long run. Okay, so last two companies for today is PNB Tech. PNB Tech, like I mentioned earlier on, it is under the industrial product and services. It is making new highs. Today is 12. Yeah, this is the updated bar. This is definitely interesting. Okay, a breakout after a sideways move, and this is a zone whereby they are not able to cross early on. Okay, so this round it is able to cross. Hopefully that this volume, good volume, can sustain, and this is definitely going to be a winner for mid to long run. Okay, this is a very, very decent chart, and everything is pointing upwards, and this is definitely a good sign of recovery for PNB Tech towards higher movements. Try is challenging, revisiting the 438. Definitely, quite likely that it will hit 438, because today it has hit the level where they tried to hit early on, but it failed to close above that level. So this round, if today they can close above that level, then this is a real runner for at least 1 quarter or so, yeah, towards 438 level. Okay, so this is PNB Tech. Last counter for today is FFB, which is under the milk or the food and beverage industry. FFB seems like wants to break out, but it did not break out, and it is still holding around the 160 level, 161 zone. So can't say much, because they might, might be hit by this raw material costs and things like that. So let's see how this will pan out in the near term. But overall, it's definitely not 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 a breakout rally yet. It is still undergoing this consolidation phase, but 169, 167 is definitely the place that I want to monitor for a strong and committed breakout above this level. Then we will be able to see further upside, and especially 169. First day there are a lot of people bought around this level, therefore a lot of people could be selling off as well. Because they want to break even. This company is slow and things like that. So basically, those are the reasons that people are not able to cross above this 169 significantly. So I believe that earnings wise is still not as decent yet. Yeah, you can see that 15 million versus 19 million last quarter. So which means that it is still not decent yet. Not decent turning point yet. We shall wait, because I think this round a lot of raw material costs hit them badly. Okay, so basically what I'm going to say is this week we have one thing to take note: CPI numbers. If higher, then it is bad for technology stocks. If it is lower, then it's good for technology stocks. FOMC meeting will pivot based on CPI numbers, and we'll see how FOMC meeting next week as well. So overall, there are two major events in Malaysia that I mean in the US, that will cause a stir in the market. But there are two main catalysts that is in Malaysia, which is the budget 2023 and also the election play going forward, that will actually help at least to support the earnings, support the movements of the stock market going forward. So that's just my summary for today, conclusion, and hopefully you can get something back from this seminar. Hopefully that you are able to continue to support us going forward next week. And we'll see you again next week, and we'll hopefully update you more things by next week. Okay. Thank you so much, and see you again. Bye bye.